Finance Committee. You can probably hear me between two microphones, but we'll be all right. It is September 13th. We have a quorum present, and does anybody have any communications that they wished to share?
Nope.
All right, well, hearing none on there, then we'll jump straight into the reports, and we've got the big audit report for us.
Hi, Andrea.
Hi, Dave. Hi, everyone. Thanks for your time this evening. My name is Andrea Jameson, and I'm the partner in charge for the city's audit, and happy to be joining you to talk about the 2021 audit results. My plan is to make a few high-level comments about the audit itself and the formal audit documents, and then go through the 2021 financial statement highlights handout in a little bit more detail. So if there are questions on any of the areas that I don't cover that you'd like to look at more closely, I think it might be easiest if we just do that at the end. Is it okay if I share my screen, Dave?
Certainly. Let's make sure I gave you security for it. Hold on. Okay, you should be okay now.
And then can you see the financial statement document?
Yes.
Okay, perfect. Thank you. So we're not going to go through this document in detail, but just a few high-level comments related to this document. So this year's audit fieldwork was a bit extended compared to usual, both with the transition in the finance director position, as well as the implementation of the accounting standard GASB number 75 related to OPEBs or other post-employment benefits. So this accounting standard is not necessarily a new standard, but one that we've been monitoring along with the city since its effective date a few years back to keep an eye on the materiality of the estimated liabilities. You've got health and life insurance benefits both rolled up into this standard. And so this year it was determined by city management to get these liabilities booked and disclosed in the 2021 financial statements. So similar to the pension standard from a few years back, the impact of this standard is more apparent at the fund level in your enterprise funds, the utility funds, because they're on a full accrual basis. The impact to the city funds is really at the government-wide level, and these OPEB standards are pretty technical, so I'm happy to dive deeper into them. Or look at the information in the statements and the liabilities. If there are questions at the end, happy to do that. But just wanted to make sure to note that is a big change from last year's statements. The other thing I wanted to draw your attention to in the formal audit financial statements is the independent auditor's report, which is at the front section of the financial statements. There were some changes to auditing standards this year that shifted some of the language. If you were to look at this year's report compared to last year's report, it also added some clarifying information in regards to responsibilities for the financial statements in both of these sections. But the overall grade of the audit opinion, if you will, did not change in the last year. We were able to issue an unmodified opinion, otherwise known as a clean opinion, which is the highest level of assurance that we're able to give. So the other formal audit report that you should have received is the reporting and insights from 2021. And this document is largely made up of required communications, many of which are really similar to the previous year. If you've never had a chance to read through this document, I do think it provides some context related to our audit work that can be just really helpful in understanding what it is that we're looking at during our testing. There are a couple sections of this document that I wanted to highlight, including the internal controls section starting on page 6. We did issue this year a material weakness over financial reporting. That was because we prepare the financial statements on the city's behalf, and we did identify one material misstatement as part of our audit, and that was really just a reclassification issue for parts of the ARPA funds that weren't spent. So that was a new item this year. And then page 7 has some additional recommendations that I would encourage you to read through, but these do not rise to the same level. They're not material weaknesses, more just for your consideration and your information. Page 12 of this report does have a link to our website, just with various topics that may be of interest to you in your role. And then the last bit of information that I wanted to draw your attention to in this report is really the last section of the report, the two-way audit communications, starting on page 26. And this part of the communication is really intended to get you start thinking about the 2022 audit, and if there are any matters that come to your attention that you feel like we should be aware of while we're planning our next audit, or really at any time during the year, please do feel free to reach out. Our contact information is included in this report on page 21, and you're welcome to reach out to any one of our audit team members to talk through your questions or concerns. So let's move into the financial statement highlights for the year. So this informal handout is something that we pulled together for purposes of our discussion this evening, really pulling out some of the key financial metrics from the year that we like to look at. On page 1 of the handout here, we're starting with the general fund, which is a reminder is your primary operating fund for the city. And we're focused on the fund balance or equity, which is what you have left over when you take, in simplified terms, the city's assets less their liabilities. And so you can see at the top of the chart, the total fund balance in the general fund at year end was just over 7.3 million, which was an increase of about 300,000 from the previous year. And by category, if we start at the bottom of the chart, we first look at the non-spendable fund balance. And this is tied up in assets that are just as it sounds, they're not in spendable form. The largest portion of this balance, just over $1 million, is tied up in non-current interfunds, which is really where the general fund is borrowing money primarily to your TIP districts. And while it's borrowing those funds to the TIP districts, they can't be spent on anything else. So once those balances are repaid, that fund balance moves back into another category. So moving up the chart, assigned fund balance is about 1.1 million. Assigned fund balances are really at the discretion of management and council, and are earmarked for specific purposes. The largest balance here, largest portion of the balance relates to the payment in lieu of taxes, or the pilot payment between the general fund from the utilities. And it's assigned because it's in current year revenue, but earmarked for spending in the 2022 budget, so that's why it gets that assigned categorization. And if you're looking for details of what else makes up that assigned balance, those can be found on page 53 and 54 of the financial statement document. So your last category here, about just under $4.9 million of unassigned fund balance. That's fund balance that hasn't been earmarked for any specific purpose. And we'll take a closer look at that on the next page. But before we go there, at the bottom of this chart, we've got the summarized income statement for the year for the general fund. And this just gives you a snapshot of, how you got that increase of just under 300,000 in your total fund balance. And compares it against your final budget or your plan for the year. So you had planned for very close to a balanced budget and came in percentage-wise very close to your plan. Nothing really major or significant stands out in the variances. Overall, really close to your plan, which is good when we're talking about predictability and stability and things like that. So no concerns there. And the details of what makes up these summary amounts can be found starting on page 73 of your financial statements. So moving to the next page of this handout, we're still talking about the general fund, still talking about fund balance. Here we are looking at that unassigned general fund balance compared to a percentage of your budgeted expenditures. So the black line and the orange line here is your policy range, and the green line is your actual result. So you can see you've got a very healthy fund balance in your general fund, a healthy unassigned fund balance. You're above your policy range in each of the last 5 years. We do have a couple of reference values which come from some of our audit clients of a similar population range. So I guess what I would say here is while you are above your fund balance policy, you know, you are really right in line with some of your peers. So these numbers really aren't concerning. They're very healthy. You could consider if your policy range continues to make sense for the city, or if you need to make an adjustment. You could determine if it makes sense to assign additional amounts to get in line with your policy in future years, or maybe you're comfortable with balances being outside of the range, potentially depending on what you've got coming down the road in your long-term financial plans.
Andrea, does that, being above our policy limit, like, or what we've set for our kind of limit for it, being above that, does that negatively reflect on any credit ratings or any sorts of things like that, or is it just purely for our math?
You may want to check with your financial advisor on that.
Andrea,
I don't think it does. Dave, do you have a thought on that?
actually, Moody's looks at that often, and one of our strengths is that we have a very strong fund balance. So the fact that we're in the 30%, well above our 25, actually helps our credit rating, or if nothing else, doesn't keep it from, or doesn't, or helps to not drop it. So
Got it. Okay.
Yeah, I've heard that 30% number as well, Dave. I'm just not sure if they look at it compared to your policy range or not. So
no, they just routinely describe us as very healthy in regards to fund balance.
Okay.
very good.
Good to know.
So then the last two graphs that we're going to look at both deal with the general obligation debt of the city. So this first one, we're talking about, again, general obligation debt. The graph is showing in black your statutory debt limit, which is 5% of the city's equalized value, compared to your actual general obligation debt outstanding, which is the green line. So about $35.5 million at the end of the year. It looks like compared to last year, you have sort of extended that margin between your actual debt outstanding and the debt limit, which is good. We've also noted in the narrative up here that your policy on debt management does have a slightly more restrictive limit, but you are, again, in line with that policy as well. Below the chart, you can see that a portion of that $35.5 million relates to the utility funds, though by and large it is city-related debt. The utilities also have revenue debt of about 9.1-ish million, but that is not factored into the debt limit calculation because it's expected to be repaid with utility revenue and not tax. And the last item on this page is a link to the Wisconsin Policy Forum for those that are interested in more data. Lots of stuff you can play around with on that tool, but you can compare across the county, you can compare with select municipalities of your choice. A lot of information out there. And then lastly, we're going to take a look at what you're spending on principal and interest on debt in your governmental funds in this chart. And we're comparing as a ratio to your non-capital expenditures for all governmental funds to get the ratio that you're seeing in green here. And we compare to non-capital expenditures just because it's a more stable ratio than if we get the capital expenditures in there. Things can fluctuate a lot more. So overall, no concerns with the information that we're seeing here. Your ratio is down a little bit from the prior year and generally in line with the peer values that we have here in black. In total, your spend on principal and interest in the governmental funds was about 4.1 million this year, compared to those non-capital expenditures of about 17.2 million. So before I turn it over for questions, just wanted to make sure to thank Dave and the city staff for their assistance and flexibility with the audit this year. Thank you so much.
Welcome.
All right, does anybody have any questions they wanted to follow up on this, on the high-level overview? Everybody's dug into the metadata on this one, I'm sure, right? All right, I mean, I'm happy to see that we've got our debt levels going in the other direction. Perfect,
We'll see what happens with the audit or the 23 budget, though.
right? Yeah, yeah, that's a little bit scarier coming up for sure. All right, thank you, Andrea. I don't think anybody's got any follow-ups.
Very good. Then I will see you at the council meeting at 7.
All right.
Thanks,
Thank you.
Andrea.
Thank you.
All right, let's see. Foil over here by Greg again. All right, we have 2 sets of minutes that will require approval. We'll take them separately, so I would entertain a motion to approve the August 9th finance minute.
I'll make that motion.
Is there a second on that?
Second.
All right, perfect. Any other questions, edits, anything like that? All right, all in favor, aye?
Aye.
And are any opposed? All right, those minutes are accepted. Second set of minutes, I would entertain a motion to approve the August 23rd finance minutes.
So moved.
Motion
Second.
by Greg, second by Lisa. Any questions or edits on those? All right, hearing none, then all in favor, aye?
Aye.
Aye.
And are any opposed? All right, all August minutes are accepted then. Next bit up is a resolution to accept the financial statements and management letter report that are dated December 31st, 2022. Is that right, or 2021? 2021.
That's a typo. It should
Yeah.
be 21.
So
Move
moved.
to accept.
All right.
Second.
A motion by Lisa and second by Greg. Any other questions on that report, or either one of those reports? All right, if none, then all in favor, aye?
Aye.
Aye.
And are any opposed? All right, and we will see that one in council later this evening in half hour or so. Next bit up is a resolution to amend the 2022 budget for Community Development Investment Grant.
As you are probably aware, Grant Inspired received a grant through the state of Wisconsin. We actually received the $76,100 today. So it's a pass-through grant. We receive it and pay it out. We just don't have it in the budget, so we have to amend the budget to give us the authorized expenditures.
So it's in and out.
Yep.
Recommend approval?
All right, is there a second on that one?
Second.
All right, take a pick on that one, Dave.
We'll go with Lisa.
All right. Any other questions on this one? This seems a simple, like Greg said, just an in and out for accounting. All in favor, aye?
Aye.
Aye.
And are any opposed? All right, none opposed on that. We'll recommend that one to council. Next bit up is a resolution to amend 2022 budget for Landmark Commission grant.
In a similar scenario, Landmarks Commission got a grant for up to $17,000. The invoice from the vendor is $16,925. We don't have anything in the budget for revenues or expenses. We're simply modifying the budget to allow us to do the expenditures.
All right,
So $16,925 coming in and out.
In and out, okay. Yeah, recommend approval.
all right,
Or,
yep. Motion by Greg, is there a second?
Second.
There we go, take your pick again, Dave.
I'll give Dave this one.
Any other questions on this one? Dave, are we adjusting the way that we're gonna do accounting with moving forward, so we don't have to do all these amendments in and out, or is this?
Well, technically, if you don't do it, then none of the other activity in the landmarks could be done because you're over budget,
Okay.
and technically we'd have to stop it. So
Got it.
we're just trying to adhere to the statutes. So
Got it.
this is kind of status quo going forward.
And because we don't know if we'll get grants awarded in the next
Well,
year, we can't,
sometimes you
budget
do,
for- right.
you know, and put it in anticipating.
yeah,
In hindsight, because we signed this award, I think it was June of last year, in hindsight, we should have included it in the budget. It got
Right.
missed. We're doing it now.
okay. So like for some of the other ones, like some of the bigger park grants and that they've had, we can add those into the budget, so we're not doing the in and out.
Correct.
But like some of these other ones that kind of come along per annum, we don't have any way to.
Right.
Okay,
And I look at the size of the departmental budget. In this case, Landmarks has very little
yeah,
for a budget. I think it's $8,000. 16,000 is way over the budget.
right,
The police department, off the top of my head, they have over $2 million in wages and benefits. If they get a grant for $500, I'm not going to worry about it.
right. In the grand scheme of things.
Grand
Right.
scheme of things, yeah.
So you look
Got
at
it.
materiality for the department and the fund.
Okay. All right, so we've had a motion and a second on that, and probably too lengthy a discussion about it. All in favor, aye,
Aye.
Aye.
and are any opposed? All right, we'll recommend that one up to council also. Next bit up is discussion and possible action regarding fire department Swiftwater grant request. Chief, you running this one?
Yep.
Awesome.
So, this is kind of last fall I had gotten communication from a guy by the name of Peter Kaminsky from Black Earth Fire Department, who's also an employee at Dane County Emergency Management, put together a countywide grant for swiftwater rescue. Back in 2018, if you can remember, the western half of the county flooded overnight with 11 inches of rain, quite a few problems. We sent people to help out at various spots. You know, pretty much everyone in Dane County was involved. So there's been a really big drive to try and get people trained on swiftwater for events like that. So on a statewide basis, When we started looking for resources, there was Beloit, there was Janesville, and then we had to pull teams from Crawford and Grant counties and Lafayette. That is it for trained state water or swift water teams across the state of Wisconsin in general. There is a group called Task Force One, which is an organized statewide team, but they are a 48-hour spool up because they're from typically career departments. And they were down at the time due to some budget issues. So there's been a lot of work done across the county for state or for the county fire departments to start working together on swift water, rope rescue, tech rescue in general. And the realization is none of us can do any of this on our own, but what we can do is train a few people so that pager goes off, there's a request, we can send a couple, Sun Prairie can send a couple, Fitchburg will send a couple, Black Earth will send a couple, and we're going to try and help each other out and hope that we have things spread out well enough that there's a group that'll get there quicker, and then backup will show up shortly thereafter for making this happen. So there's that on the countywide level, and that's where this grant comes from. Within Stoughton here, we've got our own needs. There was a call 5-6 years ago. I wasn't able to find the record for it, but it was down at Dunkirk Dam. We had a heavy rain year that particular year. There were people stranded. And truly, we have a lot of equipment. We didn't have the knowledge and some of the right equipment in order to effect a rescue. The only way we were able to effect a rescue of those people, we were able to shut the dam off for a very short period of time. And we were given, if I remember right, we have 10 minutes to do what we need to do, or the water builds up to such a point that it becomes a safety problem on the dam. So what I'm looking for, and I apologize, this is kind of last minute because I truly had kind of forgotten about this. Just a grant that to get permission for us to take advantage of this. If we accept and become part of this, next spring is when all of this training will start moving its way through. There's a place up north, and that's why the tuition as well as travel is included, because it's a few days up in a hotel somewhere going through the training for this course. So that is the request for us to be able to do this.
Right.
This is strictly for training then, not for any kind of kit?
What's that?
This is strictly for training then, not for any kind of kit?
Well, there is a PPE component and some amount of equipment that is yet to be determined. It's depending on how it fits into the whole grant budget. So they're going to get everyone trained with the appropriate PPE, which is a wetsuit, a special rescue vest, helmet, boots, gloves, and then there's going to be some amount of ropes. Now, the good part is we do have some equipment today that will dovetail into this. If you've seen us practice, we've got a big, it looks like a banana boat. It works really well for this. We just are missing a few pieces, one of those being training and knowledge. So I do anticipate that there will be some equipment that would come our way for this. That hasn't been determined yet.
And this is not a matching grant?
This is. So it is 10% where we supply 10% of the total cost. The estimate is $2,000 to $2,500, which is what $2,500 is the high side of what I figured per person. Our portion of that would be $200 to $250.
Oh, okay.
Yeah. So it knocks our cost from $2,500
That's insignificant.
to $200, $250. So it's a pretty good deal for us to get started on this.
Mm-hmm.
And inevitably, whether we want to or not, we're going to get drawn into some of these larger incidents. It's just the way mutual aid is. Everyone is struggling with people, especially daytime. So we're really pulling on each other to help out when bigger incidents take place.
All you need then from us is just an authorization.
Yep, it's authorization to be able to go to the permission from you and recommendation to City Council to be able to take advantage of the grant, and City Council will have to approve it. Have we determined anywhere else or let Council
I would make that, I
Well,
would
once
make that
council
motion.
approves it, you can go forward.
Yeah.
This, assuming that it's approved, we'd want to put it into the 23 budget so that we don't have to do a budget amendment.
Yep.
Perfect.
I would make the motion to recommend to council.
Second.
Boy, Dave, you and Lisa are like neck and neck.
Was that a not you?
Well, we'll alternate. Lisa gets
Yep.
this one.
Perfect.
So I did have a question though.
Go ahead, Lisa.
So it sounds like we'd need to be looking at a budget. Did I see in the memo you were hoping to send about 400, 4 people? And it'd be around 800 to 1,000 we'd be budgeting at this time? Is that your
Yep.
thought,
And-
Chief? Okay.
And in the capital budget and in the proposed operations budget, I had already had an earmark for training in the operations budget and equipment in the capital budget as part of the PPE. So it's already, there's money in there that would fulfill this, as proposed right now, so.
This will
Yeah,
go
this
for
seems
like,
like a really good deal and important for sure, so.
Definitely.
flood the emergencies, going through the ice in the wintertime,
Yep.
all of that.
Yeah, and we do okay on the ice stuff, but we've got, when it comes to moving water, that's where things start getting a little difficult for us. If we can't get there with a boat, motorized boat, that becomes a problem.
I mean, it's prudent because I think we're gonna have more of these instances instead of fewer.
Mhm.
All right, we have had a motion and a second. Does anybody have any other, Ben, did you have any question or comment you wanted to add in on?
No, I'm good. I agree with that.
Very good.
With this.
Okay, motion and a second then, all in favor, aye?
I,
And any opposed? All right, we'll recommend that to council, chief.
Thank you much.
All right, next bit up is an update on the delinquent room taxes and interest charges and related penalties.
Okay, True by Hilton, which
Always
seems
a
to be
fun topic.
Yeah. If you remember, they were delinquent first quarter. We billed them the interest per the ordinance, and about 45 to 60 days later, they paid that. They have not paid second quarter, so they're delinquent on that. Plan is we're going to be charging them interest again. However, we talked with the attorneys, and because the ordinance gives us the right to put a 10% penalty on, we're going to start adding that on to try and get them to stop being delinquent.
Yep.
And the attorneys did say, just because we're in a lawsuit, we shouldn't tread lightly. The ordinance says do it. We should go ahead and do it, use any tools at our disposal. And so unless the committee has a problem, I'll be notifying them that we're starting to have the penalty. And my gut feel is that when it comes to delinquent property taxes, we're going to be putting the room tax on the delinquent property tax roll to collect it there.
Well, in my opinion, they're two different things. You were talking about two different things.
Right.
So I have.
I have a hard time hearing Greg.
I was just saying that I see this as two different things, and that one shouldn't be obstructing the other. So I have no problem with Dave going ahead with this.
Yeah,
Yeah, I agree.
I agree with that too. We've got enough warnings now, so now it's gotta be, if this were anybody else, you'd get the same sort of deal.
We're not having any problems with any of the others, are we?
No.
Okay, so
Yeah,
get on board.
need any action on that, Dave, or is
No.
it just?
Okay.
Okay.
Unless you
FYI?
want to approve it, but it's in the ordinance. That's what we're supposed to do.
No, say, go for it. Do what we gotta do. All right, so that brings us into the last of discussion and possible action regarding the 2023 addendum to the 2018 shared ride taxi contract.
Okay, that we have a 5-year contract with Running Inc., so that ends at the end of '22. Technically, we're supposed to issue an RFP and go through everything else. I guarantee I don't have enough time to get that done. So assuming that the grant allows an extension, my thought is approaching Running Inc. for a 1-year extension and then go out to RFP. If the committee's okay with that, I guess the best thing would be to have a motion to continue on that vein.
So it would still come back to us once you were able to establish whether we can have an extension, whether an extension is possible or not.
Correct.
Then come back for final approval.
Yep.
Okay. Okay.
Is everybody clear about what
yeah,
we're
so-
attempting here to just add a year onto this 5-year contract? Is there an inflationary adjustment or anything in that, Dave, or?
Yeah, there is. It's based upon the BLS CPI numbers.
Okay,
It's pretty standard. Whatever it is on that date, that's what's used.
yeah, I think it would be, well, we weren't approving other contracts in there, but I think we did some other bits in and outs with the ride share program along the years, I think, but
It was actually
Accounting-wise and things.
originally a 3-year contract with 2 1-year extensions, so.
okay,
This would just be a recommendation within the committee, correct? It does not need to go to council until we get the final.
Correct, as far as I'm aware, yes.
all right,
Okay, and then I'd make that recommendation. Do is proceed.
all right. Motion by Greg, is there a second for a 1-year extension?
Second.
All right. Lisa, you didn't want to challenge him on that one?
No, no.
All right, okay.
Nothing from the peanut gallery at the moment.
Okay.
All right, does anybody have any questions or concerns or anything about this extension? All right, if none, then all in favor, aye?
Aye.
Aye.
And are any opposed? All right, go ahead, Dave, find out what we can with that one and then move it forward.
Thank you.
All right, that runs us through our business at hand. We've got future agenda items up. Next one, we'll see the August finance reports in the second meeting. We do have a joint meeting with RDA, the next one?
I've heard from you in a agreement that we should have one. I have not
Yeah.
heard back from the RDA. I assume we'll
Okay.
be discussing it, but my proposal was that the 2 committees meet jointly at 5:30 to figure out what's happening.
Got it?
For the rest of the committees, Brett's been involved in it, but basically, the decision was made in calendar year '01 to write off the receivable from the RDA. But the RDA is going to have money when the riverfront is sold. So right now, the council says we wrote it off. I just want to see if that's truly the intent, or, do we kind of rescind that write-off? But I just wanted the 2 committees to start that discussion.
All right, so be on the lookout for that as long as RDA agrees to come in for that.
Yep.
A little bit earlier start of a meeting, just so we can get things square as you're talking about it. And then the bells are coming back here, and
Right.
I'm remembering the conversation. So be alert for that one. It may or may not. We still have out there the future treatment of costs eligible on special assessments, fund balance policy revisions perhaps, and the TID 6 amendment. Anybody else have any other things that they wish to bring into future agenda?
we have any idea of what kind of requests they're gonna be making once they get into the TID?
Well, they keep pushing hard to get some numbers from me. I prepared some numbers. Ellers has looked at them. I've got to get back to the review, but I've been swamped with budget, so that's had to take a higher priority.
But do we know what they're gonna be looking for?
No, but they are strongly hinting they're looking for something.
Okay.
All right, that is our future items. Otherwise, I would entertain a motion to adjourn.
So move.
Second.
Ben got it. Awesome. Any more discussion, questions? All right, all in favor, aye?
Aye.
Aye.
Any opposed? All right, meeting's adjourned. Thanks, everybody. Thanks, Greg, for letting me.
Did you get your